What's going on, guys? So we're going to be going over the trade recaps of election week, FOMC week. Obviously, past the window of weakness now, that's going to bring a lot of volatility, and it did. It did in every single area of the market. Trump won the election. Um, and that's not really all that has to deal with why we've actually had some volatility. We would have had volatility regardless in a blow off top into the end of the year. That's just how it works with these strong seasonal flows. And after we got past the October OPEX date, that's whenever we actually had the catalyst of Trump, and that's also the return of the positive flows. And that's whenever the volatility starts to get really insane. So it was insane across so many different areas of the market, right? So everyone was able to eat. It was just a beautiful time to be trading. Bitcoin, first of all, that is just one of them charts that took, 2 weeks of consolidation, and then it finally got that pop as soon as Trump won the election. And then you go over to stuff like Tesla, that's also kind of that is favored by Trump winning, and that's whenever we got a really nice peg on a beautiful markup of 22% on the underlying. Obviously, the equity market over here was pricing in something, meaning they basically were figuring that Trump would have won. And that's exactly what happened. Boom, you get a higher low into a pop right off of the peg, where you get this daily candle sweep of the earnings candle low actually at 242.65. And then it holds it. This is a really nice risk to reward alongside trade, or just an area to add commons if you would like. And this has been one of my larger commons positions. So that was one of my bigger trades that I have been cutting and cutting and cutting in terms of just kind of incrementally cutting my commons over there. And then as far as options go, I was also trading a couple other small caps in terms of like commons and stuff like that. But as far as the options positions go, I had Disney swings, and I've been adding for quite some time actually off of this previous swing high, and not even really this previous swing high, but if you're just taking a look at this bar right here that actually broke us through on increased volume in a really nice strong day where we gapped down ever so slightly, and then we swept the previous day low, and then we got a beautiful move higher, closing up near the highs, and a plus 2.7% move on the underlying. This was actually a breakthrough candle of where we had a previous resistance of however many days right over here, 14 days of resistance, and as well as a bear gap that was left unfilled. And then once we started to get the retracement into the bottom of the gap, as well as this previous resistance at the $95 area, that's whenever I was like, okay, yeah, I'm just going to keep adding the calls here. It's going to be like end of November expiration, and we're going to see what this thing can do. And I already have some leeway on these. Basically, what my risk was $95. If you pull up the EMAs, I'm not a big EMA guy, but technically this has been holding right off of those EMAs the whole entire time. And then obviously we led into the election. Trump won. That was enough of a catalyst for this thing to get moving up towards this previous gap that is a massive area on the chart to obviously claim, hold, and then see a rebid off of that. And then that's whenever we could start thinking about a profit roll if we start to get above 99.28, or even just like the $100 psych. And then obviously I'll be looking for further up into like 104. But for the time being, that's just basically what the trade was. I still own some of these end of November's and December's, and they are up, I believe, 35%. So that was the first trade. Really nice daily coiled action here, guys. You could see how one day was actually defended by however many days of defense, right? This is one day, one candle that is being defended, and it's being defended for 20 days straight, right? So when you're thinking of this from just simple effort and result, there's a lot of, seller failure, I should call it, from over here, where they can't push it beneath the progress that the buyer made on this bar, right? And this is a one candle uh, progress, and this is 20 days of progress or of no progress, I should say. So that's just a really nice perspective of price covered over time. And then obviously we got the trend line break right into the report, and then that's whenever we gapped up when Trump won. So I was also preparing long either way. Even if Kamala were to win, this doesn't really have much to do with Kamala or Trump winning. It's just positive flows returning, window of weakness being over, and basically we were just shorting the highs, playing very passively with any sort of long throughout this window over here. We marked down, and then as soon as the election kind of happened, as well as the flows returned, we got these consecutive breakaway gaps leading into the new all-time highs on tech, right? So obviously, as you guys can see from that, there's a lot of opportunity elsewhere. So now I want to go over DKNG and ARKK. Um, the fund itself has been on an absolute crazy run. I mean, this is one of the biggest returns of 16% in a week that we've seen, I want to say ever, right? So this is absolutely huge. Obviously, a candle like this is going to be something that needs to obviously formulate some sort of clean structure for rolls, and then we'll think about trading this one in the future. But this is just a really, really, really nice bar here on the weekly. Obviously, Tesla's one of the biggest, or the biggest holding within ARKK. So when you're seeing candles print out like this on Tesla, that's extremely bullish as well. And you know, we might pull back and get a little bit of consolidation, given the fact that the volume's ramping up really, really, really high. But there's really nothing to ignore in terms of seeing how we gapped up into the election by 22% on 205 million volume almost. And then we got harmonic volume retracements into the earnings candle low, followed by a hold on that candle. And then obviously right into the election, it just looks extremely primed, right? So that's kind of what juiced up ARKK throughout the week. But ARKK has been an absolutely fantastic trade, and this is just one of them things where you're getting your post spring, right? So you get a lot of consolidation with an external sitting at 41.58, and it's been the external low for quite some time, right? Until you look at the breakdown 102 days later, right? So you guys got to think in terms of if there's a range that you have, that range obviously cannot sustain any sort of breakout base and then move, then obviously things are going to have to move lower. Here's obviously the breakout failure spot where we got our first initial lower high, and then we led to our spring. And then this is a very, very big, important part of a accumulation, and that being just you need to collect a lot of panic sellers. You need to collect a lot of, you need to shake out a lot of buyers that turn into sellers, basically a panic seller. You need to collect orders that are sitting beneath levels as to where bigger money will find a little bit more value off of a given spot at, right? And that's just basically how the spring works within Wyckoff. So once you wipe out this low, you obviously have these little mini gaps that are beneath you from like over here, you have one which it actually tested the very, very top of that one. And then this is whenever we got the major signal within the general market on August 5th. That's the whole Japanese yen carry. I don't even remember really what it was, nor did I care because I was just ready to long everything. But that was the spring on ARKK, and then obviously after since then, what happened was we started to get the discounted higher lows on a retest into the bottom of the range right over here on the 0.50 fib. That's whenever we got our first initial higher low. And then from ever on since, you started to get a lot of growth equity looking really, really, really strong. You obviously had some levels from over here previously, and basically what this was doing was just holding a support for however many days on end. And then eventually what happened was we got enough of a catalyst to break this out and start looking for the external high now of the range, which would be right over here. And we actually gapped up above, never even got really a retest, and then we just kept going. So this was just a really, really, really nice opportunity to start thinking about looking at growth elsewhere, and that's what led me into thinking about DraftKings. I initially started to pick up commons on this thing whenever we completed the distribution down here off of this gap. The initial commons trade that I had was from over here, as you guys can see on the previous distribution. We had obviously kind of some build up on volume within this range, and then we never got any true retest of this previous resistance that we actually broke through. It kind of just hovered ever so slightly above it, and then we obviously got the breakout, the new high, and then we got massive liquidation candles coming from the top. So we know that this was seller dominant given the subsequent lower highs afterwards on the preliminary distribution level at 45.62, and then obviously what that led to was a markdown into the first initial gap that we left unfilled from basically January 17th into January 18th, which was also a decently heavy volume gap. There's 26 million volume traded behind that whole day over there, but this is the much bigger gap from over here. As you guys can see, the gap from over here was 48.26 million volume, and basically what happened was we got our secondary higher low. That then led to the full-on out markdown through the report. And then we got the August 5th signal, right? So then we got our first higher low on top of the gap. We claim our way higher, and then this is your lower extremes, technically, of the previous distribution before the markdown phase happened to fill this gap. So this is a previous support that obviously rejected, flagged out, and then basically kind of held the top of this earnings candle range, and then it started to move its way higher. And then we started to get this really weak looking retracement over here, where things just didn't really look too good as far as sellers go. And I was basically just looking for this thing to hold the previous earnings gap territory, as well as the lower extremes of the previous distribution. This is your previous earnings gap from here to here. And this is just a really nice opportunity to start looking for higher lows. And then that's whenever I grab commons. My initial commons trade was over here. That led to a really nice recorrection. And I was actually short over here, expecting news with all of this liquidity that was built on absolutely no retest, right? And then we finally got the retest, and then that led to obviously the breakdown in the gap. And the retest didn't really matter, right? Because we already retested the level however many times on throughout this whole entire period, right? And there was no big volume off of this area. More of the big volume was through the earnings report on disgusting volume, and then we got the gap down, and then we got our last gap down, which was the end of the distribution, right? You guys always got to think in terms of stocks are designed to go up, so distributions only last for however long on end, and this was just basically needing a fill of this heavy volume area. So with that being said, once we started to trickle down and then we got into the report, we actually had the 2-day move with a lot of volume on the day before the report. I mean, guys, this is the biggest volume that we've had on DraftKings ever since all the way back in the end of May, right, which is actually a news gap down. So this is the most relevant bar that we have relative to the rest of the range, and this is right before the report. So whenever you go into the report, what this did was it marked down and it just simply retested right back into 3507, the $35 psych, and then started to hold that area, and then it started to get relief right back up into where it started to pull back from into the report. And we had this previous level, right? So this previous level of like resistance that's sitting over here. If you guys want to take a look at the higher time frame trend, you can. You always want to zoom out and look left. You have a big time trend line sitting over here, but this level holds a lot more importance to me. And the other thing that I did notice was that we also had an opening print that was right off of this area. And then beneath us, as far as an ad goes beneath us, this would be your breakout level technically. Beneath you would be this massive bull gap that gapped us higher based off of the whole Trump election thing going on. So once Trump got elected, we had a really nice gap up, as you guys can see. I mean, a gap from down here into up here is like, oops, I do not want to do that. I don't even. Gap from there, from the bottom to the top, is roughly 5% on the underlying, right? So you would always want to picture out that buyers would want to take, like they would want to play defense off of that area. So the first initial start off the open was a little bit scary, and I said, you know what, I'm buying calls. I bought calls like right off the open. I only got partially filled on this one since it was really volatile off the open, and I caught some retests down here, and I was basically just saying, okay, this needs to find momentum off of 39.31. It found a little bit of momentum. I popped up 40% immediately, and I was like, yeah, I gotta make sure I break even on this now because this is a little bit too overzealous of an entry, I'm not gonna lie. I just got a little too excited. So what I did was I scaled some at 40%, and then it pulled back and it pulled into my ad zone and it went down 40%. And I said, you know what, I'm just going to cut this and see how the chart kind of plays out for me over here, right? So going back to just regular trading hours, I was looking at this and I was like, okay, yeah, it makes a lot of sense to fill the, like, basically defend the gap that we established from Tuesday into Wednesday. We'll call it the Trump gap, right? So the Trump gap needed to be defended. When we go into the 5 or the 15, I typically like the 15. The 5 looked a little bit better. We had this base candle that was on really low volume, and then if you go over to like growth or anything like that, you had really nice structure kind of formulating for like ARKK, and then we obviously have a report that can bring a lot of volatility. So I said, you know what? I see a little bounce here. I saw this candle and I was like, all right, I'm going to take some size here. It's going to be relatively lighter. Not light, but like half size. And if you want to go a little bit past that, just please be careful. So that's all I was really looking for. And we caught momentum right off of the open, or I'm sorry, not right off the open, but like right off the rip as soon as I opened up that position, and then we got above that level once again. The opening print would have been my trailing now over here, and then this just kind of moved like butter all the way uh, to up. Like if you're looking at the daily chart, this would be a great area to start thinking about scaling at, and that's exactly where I started to scale at. This was like 140% trade from the highs. And then I started to roll and get into some further out expiration. I also did buy some further out expiration once we started to find a little bit more momentum above this level. And then I was like, you know what? Yeah, this looks really good to go. And then I added into this a little bit more off the 39.31 level. So I still own some December expiration on these, but I'm not fully sized just yet. We have a ton of volume coming off the chart from over here, right? So, I mean, obviously there's a ton of potential here, given the fact that we have crazy volume for 2 days in a row. So that was the trade for that one. Now we could go over into something like BA. I bought the dip a couple times on this one. This was the first dip I initially bought in the window of weakness, or I should say into the end of the window of weakness. Just right around those tech reports, and as you guys can see, BA was down 3.23% on this day. If you go over to the NASDAQ, this is down 2.5% on the day, so things didn't really make too much sense here, and the BA chart has looked absolutely fantastic given the fact that we have really nice volume over here, and then things kind of stalled out towards the top in terms of like this bear gap over here. This bear gap, like the top of the bear gap. And then that's what was kind of seen as the resistance. We got some blood on Thursday. I bought the dip off of like this little Thursday wick over here. And I was just risking this Tuesday, October 29th's low. So what happened was we gapped up right back up into the target, and then I was like, all right, I'm cutting this one, and then we got a new lower low, and that lower low was also bought, and there was a lot of volume actually behind this candle, and it just didn't really seem like anything was going to be messing with. It didn't really seem like anything in terms of what I was seeing happening into the tape afterwards. Most of the volume poured in at the lows. It didn't pour in like on the sell. It poured in at the bottoms on these really diminished candle type of spreads here. Obviously, we had the breakdown candle, but this would be a breakdown failure candle, I should say, beneath this previous swing low from over here. And it actually is like a little double bottom support, right? So whenever you are getting a breakdown failure candle, you would typically like to buy pullbacks like this, anything that you could really get. I initially bought it like right over here, right on top of the level, and it was a little bit speculative, and then it gave me another add opportunity into the closure over here, and it gave you a couple flags throughout this whole entire recovery back up into the top. But this was more of just a bigger perspective swing trade for August expiration. Next following day, the trade's up like 40%. I take scales on the top of this candle, and then I still have a decent amount of these working for me here now that we have a double inside bar. Volume's kind of drying up, and then we had a lot of volume pouring into the name on this day, November 6th. Not a lot, but increase of volume, and it was a breakdown failure with a wick sitting there, right? And then we actually are now above this support as well. So I would really like to see some expansion with BA, and basically all I'm really looking for is to get above the outside bar high, and then maybe retest base and then go for the resistance once again. But other than that, I mean, it's good premium. It's very relaxed. I have December 20th expiration here, so I guess we'll see how that one works out. But yeah, that's that one. INTC, I've been talking to you guys for so long about this one. This is just a super nice trade. I don't think it's as nice as Marvel, but it's super nice. And the two structures actually kind of somewhat align. This is kind of just that multi-week base that's sitting on top of a previous level. As you guys can see, from November 1st into November 4th, what we got was actually a removal out of the Dow. And I initially added on this candle, which was the earnings candle with a lot of volume behind it. And everything was just looking really good on this day. And then it gave us an absolute blessing of a dip whenever INTC got removed out of the Dow. They replaced it by NVIDIA, and I just don't care about that. That has nothing to do with the direction of an aim for a whole entire quarter, right? We have the rest of Q4 to play with here, and this is just one of them trades where when you zoom out and you look left, it tells you the major story about this one, right? If you just want to take a look at basically where everything kind of there's a lot of liquidity that's sitting off the sitting up here at like 29 to like 30. The gap fill is actually 29, and then there was so many positions that were being built at 30, right? And then you got to think we're getting into the end of the year. There's going to be obviously an intention of heavier buying happening over here, as well as obviously you're also going to get the late short covering potentially, but this is just more heavier buying to then mitigate a lot of the losses that are sitting from positions being built into the $30 range, especially for the taxes and into 29, which is the gap fill. And then you also have this previous level as well that has a lot of positions that are kind of being built off of it. So this 20%, 26%, what is that, 26%? 26% gap down over here on August 2nd, with a ton of volume behind it. You guys got to remember, if you're just looking at simple price, volume, and effort result, I mean, this is just one low made, and then it got relief back up into the top areas of the earnings candle high, and then it saw one more lower low, and that one more lower low was really dry on volume, and then we started to get a really nice leg up on increasing volume into the top of the earnings candle high, and then that's whenever news started to hit. I saw massive positions being built in the tape. There was a lot of options flow in this thing, and it was just a really nice alignment of this thing just being able to build out really nice clean structure. And there's one thing that I do want to say with in terms of like price covered over time, and like how price needs to digest, how price needs to obviously compress, how volatility needs to compress for that accumulation to then build out into a markup phase, or the distribution into a markdown phase. And that's just through a lot of consolidation, a lot of that options flow kind of getting weeded out, the premium getting absolutely fried. They're buying into an implied vol spike when they see this kind of volume hitting the tape, and they see a major influx in options. They all got cooked, right? But they're not very good. That's one thing that you guys got to remember. Just because you see an options flow order, just because you see news, it doesn't necessarily mean that the stock's just going to move just because. A lot of those options flow, thingies are just, they get absolutely smoked, right? So you always want to kind of hold context to the chart and just understand that a 26% gap down with a fresh test into the bear gap is going to need a lot of digestion. It's kind of like the same with Tesla in the summer. You take a look at something like Tesla over here, where you're having a previous downtrend, and then you get this massive gap up on the earnings, followed by another gap 2-3 days later on some of the biggest volume that we've ever seen outside of a report. This was a news candle actually, and we moved up 15%. You're going to need to digest a lot, right? And you have so many people that are trying to front run the continuation on candle structure that looks like this, and it's just not the greatest deal. right? So you go over to something that looks like INTC, and this had one lower low of accumulation sitting from right over here, and then you also kind of had the breakthrough candle that formulated two inside bars that are sitting within the wick. So I guess this trade was decent if you were a buyer from like September 23rd through 24th into the 25th and look for the continuation into a retest off this previous low, then that was a decent area. But once you start finding the pullback on lower volume and then pretty weak volume and weak daily candles that are sitting off of the earnings candle high in this previous daily resistance, then you likely need to wait. There's not likely going to just be, something that looks like, okay, you're on this retest, it gets one retest and it goes. No, we just marked down 26%. You're getting harmonic volume. There's no true seller that's really stepping in through, as you guys can see on the volume profile, there's no true seller stepping in off of this massive weekly and monthly level at 24.59. So that's a very good sign, but you just need to remember that we need to wait for those holiday flows potentially to return. We might need to see a little bit of agreement and volatility in the general market for this thing to start moving its way higher. And it's just as simple as big moves are followed by compression. And obviously, compression brings big moves. And, whenever you have a big move, you need the digestion, right? So that's basically that's all there really was to it. So if you were buying the earnings candle high and the resistance with time, you're a genius. I mean, not really. It's just people don't understand how easy things can really be. They just want to hit the lotto that goes 5 trillion% or something. I don't know. But yeah, I mean, this is just a really nice setup here where you finally get your earnings candle, the heaviest volume that we actually seen since the inside bar that was sitting within the wick of the news candle, right? So this is very significant. And then you get an inside bar on lower volume which this was actually the sell of 3% on the underlying that allowed us to get a little bit more optimal of an optimal entry after the report as well. Whenever it got removed out of the Dow, and I gave you guys a heads up that I don't care about the dip. I'm buying the dip immediately. And that's exactly what happened, right? We bought the dip, and this thing just started to really move its way higher. 200 and something percent swing, 210% swing with a few weeks of time. And then I also have some more time leading into the end of the year. And then I don't really trade leaps, but I just been buying commons over here. So that was another commons trade. Now basically I'll just look for rolls off of 24.59 as well as this previous retest. If it doesn't give us that, I'll probably roll anyway on any sort of shallow retest because I think this thing's going to move like absolute butter up into like 30, 29. So that's going to be a focus of mine moving forward. And this is just one of the names that has beautiful asymmetric risk because you guys got to think in terms of like ADR, in terms of like premium, in terms of everything that has to deal with INTC. It's all pretty good deal. It's all pretty like stress free. It's all pretty easy to manage. You don't have to, panic on any sort of small time frame. You can sit back, relax, and just watch this thing move. And that's exactly what happened, right? So these are the trades that I absolutely love, and there ain't really much better. So BABA, I traded BABA intraday yesterday, on this day, and all this really was a claim of this previous, the top of the bear gap, and we also had our opening print off that area. And if you go into the 15, all this thing really did was hold that area for pretty long, and I bought BABA 2 times off the open right over here, and then I bought it one more time over here. And I took next week expiration. I was just basically looking for this high over here, or just this general resistance on like the hourly. And we got into that resistance area, and then we started to reject off of it. Very clean, easy trade of like 40%. So with that being said, that would be all of my trades for the week. I also had some other ones with just like simple shares on ARKK. And there's been so many growth opportunities out there to be able to take advantage of. And then as far as tech goes, I mean, guys, like I said, we had the election, we had all these things going on where um, I didn't um, I didn't really need to have a lot of trades in in every different little sector. or every different little tech stock. I didn't need to do that. I didn't really know who was winning the election, first of all. Second of all, do you necessarily know the like obviously Tesla, yeah, like we kind of know like what Tesla will do if Trump wins. But aside from that, there wasn't really anything that was too much of my interest. If you go over to something like FSLR, this was also another easy intraday trade where you get big volume followed by dried up volume, and then what it does is basically just fill the gap. And then I took the continuation the next following day, as well as this day over here actually. So this was just a very, very easy, clean trade where you're getting this like base off of like 209, which is the top of the gap, at 210. And the volume patterns are bullish. Everything looks bullish. I was just looking for a run up into the election for the bidders that think Kamala might win, and she didn't. But this was just a really nice trade from like 210 to like 16. And yeah, oh, actually, my entry was on the opening print. My bad. 209 to 216. So $6 move over there. Not anything too crazy. My risk would have likely been like $1.50. So decent risk to reward. Probably just, I think it was just like a 34% win at most. So yeah. I don't think there really is anything else. Basically, I'm just letting the comments do the work for me here. I also had, what else did I have? I had a couple other smaller trades, but they were earlier in the week before the election, and I basically just let, I did have MU shares. I have MU shares. This chart's insane. I'm probably going to trade this one next week. We actually had a gap over here that I wanted to be filled for taking full size, but it never filled. And then we got into the election, and then obviously that was the catalyst to push it back up to the top of the range at 113.37, 114-ish, I guess you could call it. So above 114 next week, I'll be looking at this one. And there ain't really much of anything else. Last week was really nice. This week, same general slower trading, but you know, when you're tossing size in at some of these trades that make a lot of sense, it's very easy. Crowd, I've been talking about this one like a broken record. I've always liked charts that give me these capitulating breakaway gaps to the downside type of things going on here. Same thing for the upside. You guys should already know what I'm going to say about this. Very, very basic, easy chart. And you're basically just buying the higher lows and taking them up into test into these gaps. And then once they start giving you the harmonic volume off of the test of the gap, then that's whenever you're like, okay, yeah, this swing high didn't collect enough supply. It doesn't have enough of a willing seller, so it has to move higher. And we had a gap fill all the way up into 343. So this has just been a really nice, easy swing trade for a lot of time. You should be buying a lot of time, but the premiums are very expensive. So I don't really talk about this one too much. I have talked a lot about how I'm in these commons and further out swings, and this has just been a very, very easy trade to take opportunity off of, like basically 1, 2, and 3 times. And even like 4, if you're looking at like this previous flush, even like on this candle from here, maybe up into here, pull back, roll, move into the top of the gap, pull back, roll, or just buy Comet. Like, I don't know, do whatever you want. But yeah, there's been several opportunities for entries. Marvel, another commons trade. I've been bullish on this thing ever since over here on the base. 34% return in a little bit over a month, right? Nothing you could really beat like that, right? I mean, this is like a monthly return of however many percent. It's like 30%, 31%. So, yeah. Aside from that, there ain't really much more to talk about. I'll hit a scan on Sunday, and we'll see what goes on Sunday, but yeah, that'll be it for today.